Hello and welcome to our video by forex Capital. Today we are going to go through our top 6 trading indicators for day traders. Let's be honest here. There are many indicators out there that do so many different things. It's almost impossible for you to test and try them all out. It's hard to find an indicator that does everything you want for day trading. So in this video, we are going to rank the top 6 indicators you can use for day trading. By the end of this video you will know which are the best indicators for day trading. Know which indicators are best for each style of trading. Know what each indicator does. Know why we rank them as the best indicators. But first, here is our question of the day. What trading indicators do you use to trade the markets? Comment your answers below. We'll be revealing ours at the end of the video. Now let's get into the top 6, starting with, at number 6, best indicator. The Bollinger Bands. This type of indicator is lagging behind the price, which means it uses data from the past and plots it at the present. The ideal time frame for the Bollinger Band can be any. This indicator is ideal for scalpers who want to take small bites out of the market, as frequently as possible. Moving forward, let's discuss what Bollinger Bands are. They are used to measure volatility primarily. They have an upper and lower band, which is 2 standard deviations away from the mean, the red line in the video. The upper and lower bands can be used as dynamic support and resistance levels. As you can see here, the market moves up and down towards the middle line numerous times. This creates opportunities to trade. So, how do we use Bollinger Bands? The upper and lower bands show us when the market is 2 standard deviations away from the mean. This indicates that there is a high chance the markets may revert back to the mean. By knowing this, you can trade when the markets are at the upper or lower bands and trade back towards the red line. The key takeaway here is that it is perfect to take small chunks out of the market. So, why have we placed Bollinger Bands at number 6? The indicator is very versatile for day trading, and works on any time frame, which makes it a strong choice for many traders. However, we believe there are better indicators out there to choose from. Which brings us on to number 5. At number 5, best indicator. Parabolic SAR. This type of indicator is also lagging behind the price, but allows us to predict future movements. The Parabolic SAR can be used in any time frame, generally the higher the better. This indicator is ideal for traders who want to swing trade. So, what is a Parabolic SAR? This indicator is based on the market producing a parabola from a recent trend, giving day traders an opportunity to find a potential area for the market to reverse. This is the advantage of the dots being printed. It helps traders see clearly on the chart when an opportunity may arise. As you can see here, the market reverses several times when the price breaks the Parabolic SAR, the dots. Now then, how do we use Parabolic SAR? When the markets move sharply in one direction, the parabolic move, the indicator will start to plot dots on the chart. Once the price breaks above or below the SAR dots, day traders would look to take a trade following a breakout confirmation. When traders have an open position, some use the Parabolic SAR as a trailing stop loss. So, why have we placed Parabolic SAR at number 5? It can identify and monitor upcoming reversals. It can be used as a trailing stop loss indicator. It is great for breakout trading, and is easy to use. However, it can throw out weak signals in lower time frames, often due to the quickly changing trends. Which brings us on to number 4. At number 4, best indicator. Donchian Channel. This type of indicator also lags, which most indicators do because they need previous closed data points to print on the chart. The Donchian Channel can be used in any time frame. This indicator is ideal for traders who want to focus on breakout trading. So, what is a Donchian Channel? The indicator is similar to the Bollinger Bands with an upper, lower band and a moving average in the middle. However, the upper and lower bands are previous highs and lows. The Donchian Channel was made infamous by the turtle traders experiment that turned average Joes into profitable traders. As you can see here, the market trades higher and lower when the price trades above, below the previous Donchian Channel lines. Now then, how do we use a Donchian Channel? The most common setting used is a 20-day period Donchian Channel. If price breakouts above the channel lines, it's a buy signal. If price breakouts below the channel lines, it's a sell signal. Not only is this a tool to discover potential breakouts, but it is also used to signal how volatile an asset is. The narrower the band, the less volatile the asset currently is. So, why have we placed Donchian Channel at number 4? It can automatically plot the highs, lows from a defined period, which makes it easier to track. It can make identifying breakout trades easier. It can also protect you from potential fake breakouts. However, it can also give false signals in lower time frames due to the weakness in short-term high and lows. Which brings us on to number 3. At number 3, best indicator. Fractals. This type of indicator is also lagging because it must wait for 5 candlesticks to form a pattern. Fractals are ideal for any time frame. This indicator is ideal for traders who want to focus on breakout trading. So, what are fractals? Fractals is a 5 candlestick pattern that can be used to detect reversals in price in both bullish and bearish trends. Fractals are a great way to quickly identify when the price is breaking the current market structure. Fractals through indicators normally print an arrow to highlight the pattern. As you can see here, the market reacts to these fractal points. Now then, how do we use a fractal? An upwards fractal has at least 5 continuous bars and the highest high is in the middle of the 5 bars. A downwards fractal has at least 5 continuous bars and the lowest low is in the middle of the 5 bars. You will commonly trade when the market breaks the fractal. So, why have we placed fractals at number 3? It can easily identify potential trading opportunities. It can make identifying breakout trades easier. It can be used with other indicators to provide validation. However, it can also give false signals in lower time frames due to the weakness in short-term fractals. Which brings us on to number 2. At number 2, best indicator. Ichimoku. This type of indicator is also lagging, but it has an awful lot going on. You can also suggest that the clouds printed in the future is a leading indicator too. You can use Ichimoku on any time frame, higher the better though. This indicator is ideal for any style of trading. Whether it is scalping, breakout, trend following, it can all be done here. So, what is Ichimoku? Ichimoku is an all-in-one indicator that can benefit any trader. It allows you to identify when the markets change its trend using its moving averages. It also allows you to trade breakouts when the market pierces the clouds. As you can see here, the market reacts the Ichimoku very well. Now then, how do we use Ichimoku? With Ichimoku there is a lot to learn because of its versatility. Primarily, you can focus on trend following by waiting for a crossover of its moving averages. Or trade breakouts when the market pierces the clouds. Both are really good methods of using the indicator. The clouds printed in the future are future support and resistance levels. So, why have we placed Ichimoku at number 2? Well, given its versatility, this is one of our best indicators for day trading. It's fairly accurate and there are plenty of ways to trade. It works across any time frame, so suitable for most traders. However, it can be confusing at the start, but once mastered, it'll be all you need. Which brings us on to number 1. At number 1, best indicator. Whole moving average, or HMA. This type of indicator is also lagging, but it is as close to zero lag as possible. You can use HMA on any time frame. This indicator is ideal for any style of trading, scalping, breakout, trend following, it can all be done here. So, what is the whole moving average? The best thing about the whole moving average is that it eliminates lag between the indicator and price. What this means is that the HMA will hug price a lot better than other moving averages. As you can see here, the market reacts to the HMA very well. Now then, how do we use the whole moving average? If you've used a moving average before, then you will know how to use the HMA. However, it follows price more accurately than any other moving average. This allows it to replace all other moving averages strategies, which helps you find better opportunities. So, why have we placed the whole moving average at number 1? Most day traders love moving averages, and the whole moving average is the fastest and smoothest available. Therefore helping you making better trading decisions. You can use the HMA with any strategy that uses a moving average, with great success and accuracy. It also works across all time frames, and is easily adaptable. However, traders can be too dependent on moving averages, and may miss out on the bigger picture trades. Now, I know what you may be thinking. Which should I use? We've ranked 6 of the best indicators for day trading, that we believe would not only be easy to learn and implement, but help you find better trading opportunities each day. All the indicators are useful for different scenarios. That wraps up today's video. Don't forget to like and comment below. Don't forget, you can click the link in the description to learn more for free. Until next time, stay safe, trade well.